All right, gentlemen, we'll come back to you with many more trading questions. But we had a bunch of numbers that came over the holiday, especially after Monday markets. And Mayuresh Joshi of Angel Broking joins in to give us some idea of whether any of these can be bought, short, sold. What is his view? Morning, Mayuresh. Thanks much for joining us. Well, let me start with Nilkamal. Now, that stock has been rising, saw a very good rally. For me, the numbers look good, but you could complain about the sales. Do you look at that stock closely?
Morning, Lata. Oh, yes, and clearly I think we did have a coverage at lower levels. And clearly if you look at what has probably transpired with the stock, with polymer prices going down and expected to stay low because crude is expected to stay benign over the next few months to say the least, the margin expansion would be quite evident. Now what this has done positively on the stock is that they have repaid their debt quite significantly and they're still on a spree of repaying their debt over the next few quarters. Secondly, I think with the kind of operating efficiencies that have started coming through, specifically on the plastics division, which accounts for almost 85-86% of their top line. And within that itself, I think if you look at the material handling division, and if one really expects the economy to recover over the next few quarters in terms of earnings propping up for various industries, Nilkamal's B2B division, specifically within the plastic segment itself, is expected to do well. Now, do we expect the asset turnover ratios to improve? Oh, yes, we do. So I think from 2.5 times, we expect the asset turnover ratios to be around 2.7 times. You've probably seen the working capital cycle improve for Nilkamal with reduction both in inventory and debtor days. So clearly, I think debt going down, working capital cycle coming down, you're probably looking at operating efficiencies come through. Does that probably transpire into top line growth growing at a decent pace? Our expectations is an 8 to 9% on the top line over the next 2 years, a top line close to 2,100 odd crores. With efficiencies kicking in, the bottom line should actually double from FY15 to FY17. Has this got into the price at the current juncture? In our opinion, probably the stock has run up a little bit too much in terms of how the earnings are panning out. But clearly, I think investors holding on to the stock should clearly hold on, though the valuations look a little bit stretched at this point of time.
Okay. Mayuresh, hi, morning. The other very good set of numbers that came in from the infrastructure space was from Ashoka Buildcon. That company reported a 33% growth in revenues. The toll income was very strong this time, almost 70%. Do you track that? Do you like it? And if not, anything else in that space that caught your eye?
Morning, Sonia. So clearly, I think if you look at this segment itself, I think Ashoka Buildcon, you can probably add a Sadbhav, you can probably add an IRB, but clearly on Ashoka Buildcon itself, I think the order book looks very decent. It's spread across EPC, port, as you rightly said. I think the numbers were quite decent, at least in my opinion. Clearly, I think the kind of projects that it has got under its ambit, I think are quite significant. I think the revenue visibility itself is quite good in that respect. Clearly, if you look at how the earnings trajectory will pan out, a decent track records just on a historical basis on what they've probably done, they should be able to achieve a double-digit growth. So clearly, I think investors, again, holding on to Ashoka Buildcon at low level should continue holding that. Though I think IRB can be something which can be looked at lower levels. Clearly, I think with the order book that IRB has got, the equity IRRs that they're probably expected to generate over the next few years, I think IRB infrastructure also looks like a very, very interesting stock over the next 2 to 3 years, and a disclaimer being that we might be holding these stocks in our portfolios.
Okay, actually, there were a bunch of numbers which usually brokerages don't track very closely. There were good numbers from Thangamayil and OK Play India, bad numbers from Asahi Songwon and Scooters India. Just take us through anything that may have stood out for you.
No, I don't track these, and we don't track these, Lata, but clearly I think HMPL is something that we probably track, and HMPL also came out with numbers. I think there was a strong advertising revenue growth, almost 19% on a YOY basis. If you're talking about the circulation revenue, that grew 6%, which probably led to the PAT growing at 29% on a YOY basis. Clearly, I think if you're looking at the trends, specifically for the Hindi publications, which include HMPL, which include Jagran, our own take is that the Hindi reading belts, circulation revenue is expected to grow at a decent pace. The advertising revenue might just taper off a little bit because I think the BR elections are out of the way, and that might probably have a telling effect in terms of a quarter-on-quarter performance. However, I think the ad revenue growth still seems to be very strong, specifically for these publications. Input costs are extremely benign, so I think that EBITDA expansion that you're probably seeing is expected to continue for the greater part of 2016. So clearly, I think HMVL becomes a clear hold, and in fact, what we like at the current juncture is something like a Jagran Prakash, and where we believe in the radio business is doing extremely well. I think the margins that the radio business is posting is quite reasonable. They've got a decent market share in key markets like Uttar Pradesh, Uttarakhand, and that should hold good for the stock over the longer run.
Okay. Well, what is your view now on some of these private banks, Mayuresh, that have come out with their numbers, and what are the top recommendations that you would have there?
So clearly, Sonia, I think we've been recommending the strategy of having a bunch of these larger private sector banks. HDFC Bank, in our opinion, came out with a decent set of numbers. Consistency is the keyword for HDFC Bank. So I think though the asset quality in absolute terms on the GNPA side increased, I think you're probably looking at the bank still posting a decent revenue growth and an earnings growth in excess of 20%. Having said that, probably I think the kind of disclosures that Axis Bank has done is very encouraging. And clearly, I think the CASA spread that these banks enjoy, specifically on the private side, along with the strong capital adequacy, should hold them in good stead. So I think one really expects credit growth to start picking up over the next couple of quarters. Even if you assume that that does happen, the kind of leverage benefits that they've got with the branch expansion, and they've got a very decent non-interest income as well. So I think though they're trading at higher valuations compared to the public sector counterparts, I think these factors set them apart. So clearly a bunch of the larger private sector banks, something like an Axis, Yes, ICICI, HDFC Bank, is something that we're probably suggesting investors to look at. And clearly that will also de-risk the strategy of probably going with one bank over the next 6 to 9 months.
Yeah, all that is taken, but tomorrow ICICI Bank numbers come. You didn't allude to that stock at all. Will you buy it at all ahead of the numbers? What will you watch out for the numbers?
No, clearly, I think ICICI Bank also remains one of our picks. Yes, I think the kind of stress that one really expects to come from the corporate stroke SME side can be a little bit stressful for a lot of these banks who have probably got exposure towards these segments. But clearly, I think the kind of NII growth that we're expecting over the 2-year horizon, I think a quarter-on-quarter thing, in our opinion, as I've always maintained, that this quarter and next, it can be a little bit of an asset cleaning quarter for a lot of these banks having exposure, along with the RBI directive that has probably come through. But again, clearly, I think we're expecting reasonable NII growth to probably come through, asset quality largely to remain stable. And clearly, I think if one really expects, as I said, in the larger picture of credit growth picking up, these banks are right up there in the top quartile as the recovery starts taking place. So yes, I think ICICI Bank would also remain one of our favorite picks, but again, as a bunch in the private space.
Yes, I think one would watch out for very closely. Axis Bank actually saved the blushes. It was just a 30 basis point increase in bad loans that you saw from 1.3 to 1.68, and the disclosures were extremely heartwarming. That 70% of their indebted book is still A grade, as they revealed to the exchange. We'll have to really wait and see. I wouldn't be all that sanguine about ICICI Bank till I actually see the numbers, for the simple reason that they are exposed to a lot of the indebted groups, and therefore one has to find out how much they recognize and what is the quality of the unrecognized book as well. Okay, let's get some more trading strategies in from the F&O space, and that will be more important, penultimate day of the winding up of the contract. Amit Gupta is joining us. Amit, first quickly your trade on the Nifty.
See, I think today and possibly tomorrow, the markets may have a limited downsides, and it is likely to expire closer to 7500 or 7540 levels, because we have seen the trend before also when the Nifty starts falling from the start of the series, and it's a one-way fall. Generally near expiry, whenever it reverts, it tries to settle near the volume weighted average price, which is close to 7540 this time. If you look at the volatility, it has reverted from the very crucial level of 20. Since the month of September, whenever there has been any panic in Nifty, we have seen that it has almost ended closer to 20 levels of India VIX. Again, it is happening, and it has come below 20 levels in the last couple of sessions. So that's why I think the downsides, whatever comes, possibly it may be closer to 7400, which should be utilized as a buying opportunity. Now, because the walls are cooling off, it may further cool off in another couple of sessions. So we are recommending to write 7400 put option only of January series if you are getting closer to 30-35 rupees. And another thing, if you note, is the oversold stocks, like you mentioned about Axis Bank. Some same thing happened with Ultratech Cement, and to some extent L&T. So we have seen some surge in these stocks. Now that has happened because the traders who were short like anything in these stocks, they have at least covered some of the positions. Now, most of the positions are getting rolled to Fab, but this is a little comfort that some of the positions are, getting close of the January series. Still, the rollovers are not that much robust. The reason being, we are not seeing that kind of heavy rollover of shorts into the next series. But yes, because the shorts are still getting rollover, so the range bound kind of move will still prevail in the month of Feb. So if you look at Nifty, the rollovers have been little lower, but the roll spread is not picking up. It is only 10. If I include the dividend of 10 to 11 rupees in the next month, so that roll spread comes to 20. So that is not too high. So that means the short roll is still on. But at least from the expiry perspective, once we have seen the pullback in these oversold stocks, I think there is some comfort. The walls may cool off, so it's better to write the 7400 put option now.
Okay, thanks a lot for that. Amit, we'll come back to you with more stock questions. But let's give you some more trading ideas in our Super 6 segment.
My first recommendation today is buy on Jindal Steel and Power. If you look at the data for last few weeks, you will see that the fall has started. It started on account of long unwinding. Some trading shorts are seen getting built toward the end of the painful leg. So I would recommend going long. One can target 75 rupees in the stock. One can have a support at 60.
First stock for buy in today is going to be JSW Steel. We can see that there is some kind of a base formation in commodity stocks, especially metal stocks, and when Nifty failed to find support near 7300 level, this stock managed to form a higher low. One can create long position on JSW Steel with a stop loss of 1045, and the target can be expected at 1195 on upside. My first call is a sell call on CESC. We have seen a fresh breakdown on CESC. CESC has also demonstrated a negative crossover on the momentum indicators. It has cracked the major support level equivalent to 7250 level on the Nifty. CESC is a good sell at current level. Stop loss 450, target 405.
My second recommendation today is sell on CEAT Limited. The stock has been trying to test levels of 940, 950, but has been unable to do so. The reason is that you don't see good amount of long positions happening above 930, 940 levels. I would recommend going short for target price of 890. One can have a stop loss at 942.
The next stock in buy is going to be LIC Housing Finance. We can see some kind of a step up move in this stock, and after a rise it has been consolidating. So there is a possibility that the short term trend should continue from here. One can buy LIC Housing Finance with a stop loss of 462, and the target can be expected at 513. My second call is a buy call on Lupin. Lupin has developed a good support at lower levels at around 1679 on the downside. It has made a rounding bottom formation. We have seen a decent correction in Lupin. I am of the opinion that Lupin is unlikely to crack support of 1679 on downside in this expiry. Buy Lupin. Stop loss 1679, target 1774.
Alright, those are a couple of ideas for you, but let's get a handle on what's happening in the derivatives market. The positive is that the FI selling has reduced considerably in the cash market. Nigel D'Souza joins in now to give us more details. Nigel.
Well, Sonia, just to start off on that point, that we had the smallest sell figure that we have seen in 2016 itself. But if you just take a look at it on a monthly basis, January 2016, we have seen more amount of net FI selling in comparison to November as well as December put together. Now, that could come as a bit of a positive that yes, they are reducing their selling in the cash market, but just take a look at what they did in the F&O space. In the index futures itself, they had a closure around 900 crores on the short side, and in fact, if you just take a look at the total net short positions on the index of the FIs, it's increased by close to around 8%. So that is not very comfortable, given that in fact we have seen a good 500 point cut on the Nifty, and after that we are seeing short positions get bound up. Now, we did see that in fact they went long on certain stock futures as well. So certain stocks could move higher. That in fact what the data indicates. For this series, we have expiry that's going to play out tomorrow. Maximum open interest on the call side is at around the 7,500 level, while in the put side the maximum open interest is at around the 7,300 level. In the last trading session, we did see that FIs, they bought some calls. So this morning I'll be looking at the 7,500 call very closely, because it's interesting to see whether or not they book out, because they'll be making some money, given that the SGX is telling us we're likely to start off in the green And on the downside, we have been talking about the FIs. They have been long on puts as well. So the 7,300 put, that had the highest open interest, but in Monday's trading session, we did see some unwinding out there as well. But in the near term, that's till tomorrow, we should see that level hold out. Back to you.
Okay, so protection at 7,300 could be expected. Let's hope that will hold. After all, we saw a fairly strong rebound at 7241. We'll take a break on that note. We are not done with all the pre-opening cues. We will also get pre-opening rates in a bit. Back in a jiff.
Renault Passion for Life presents Headlines of the Day. Brought to you by Renault Passion for Life.
Welcome back. We should be getting the pre-opening rates in just a bit. Let's pull up SGX Nifty for you. That's still indicating a shade of green, and that's welcome. Asian markets were largely in the green. Mixed is an unfair way of putting it. It's largely in the green, so perhaps some positive cues from there as well. Well, let's quickly get one more trading strategy from Amit Gupta. Amit, any of the Nifty names that you would trade?
I think Infosys can be looked at, because in the last 2 or 3 sessions, if you look after the gap up opening we had on the result day, it has not been moving. I mean, it has been consolidating around 1130, 1140 levels, and before the result announcement there was heavy call writing in 1100 and 1140 call options, and 1100 call we have already seen the short covering started, and that is expected in 1140 call options also. So that is why I think eventually the stock should start moving up. It has limited downsides. If you look at the short futures positions which were there before the result, they are getting rolled into Fab, but the quantum is very low. So I think the rollovers are very low, especially from the short point of view. So that will provide some boost to the stock. And we have seen previously also, whenever it gives a good move after the result, that generally continues for at least a month. So that is why possibly the month of Fab is going to be good for Infosys. So from here on, once it has come down in the last 2 or 3 sessions, it's a buying opportunity. Look for a target of 1200 in the stock.
Okay, we can't squeeze in another question. The pre-opening rates will be just upon us, and one assumes that we're going to see a positive Q today. All right, Nifty starts with a not very positive Q, but we can ignore that. The Sensex is still in the green, 0.2, and Nifty up about 0.3. The SGX Nifty is still indicating 42 between 40 and 42 up. So I guess that will prevail. And okay, now we are beginning to see some bit of green on the screen for the Nifty as well. Not getting any rates just yet. Okay, they're just about showing up. More red ticks than green. HDFC Bank starts with a bright paint of green, as does Maruti, Tata Motors, Hindalco, Z. But I don't think they are worth reading just yet. 67.83 was where the rupee closed. And I guess, okay, that's where the rupees opened about 7 pice weaker, not much in terms of, it's largely an unchanged trade, but I'm a little surprised that it has opened weaker. I would have expected that there would be a little bit of strength, but some weakness in the rupee. 67.94 as we speak. Okay, can we quickly get some more stocks that were in the news with Mangalam? Mangalam, we saw some announcements on the exchange.
That's right, Lata. So some announcements. One of them is NBCC. Now they've informed the exchanges of an order win of close to 2,150 crore, which is with regards to redevelopment in Pragati Maidan, Delhi. At the same time, Majesco, the US subsidiary from where they get the maximum revenues, they announced their third quarter results and looking weak there despite a 37% growth in revenue. The EBITDA has actually turned for the negative and the company's posted a loss of close to $1.1 million as well. At the same time, Apollo Hospitals, remember the promoter entity Apollo Energy Co. is agreed to divest 23.3% stake in the life insurance business, which is Apollo Munich. However, we also learned that the company itself, which is Apollo Hospitals, they have no plans to divest their stake. In fact, they hold about 10% stake in Apollo Munich, and we understand they will continue to hold that as well. Sun Pharma and Lupin, both of them will be also in focus because they've got tentative US FDA approvals for a drug which is used to treat schizophrenia. And finally, I'll reiterate, Max India will again be in focus today on account of the fact that the three-way split goes ex-date today, and CLSA expects Max Financial Services to list anywhere between 310 to 350 rupees.
All right, Mangalam, thanks for that. Well, let's get back to the market. Seems like the opening will be good, up about close to 1% in tandem with a lot of the Asian markets, but we've seen how these things go. The closing is far from the opening on most days. Uday Mukherjee joins in as well into this conversation. Uday, hi, good morning. Volatile days is what we've had to deal with. Do you expect this volatility to continue?
Hi Sonia, good morning. I think right now the market's in a bit of a relief phase. We got bombed down to about 7,200 level on the Nifty, and from there's been a bit of a relief, not just in India, but across global markets. I think partly orchestrated by the kind of central bank intervention or news that global markets are expecting. I think the Fed will be very dovish today and tomorrow. The ECB is already trying to do something to douse the flames in global markets.